Did you know that decentralized finance is not all that decentralized? Besides the fact that many DeFi protocols are operated by a single company or a small collection of individuals, the stablecoins which make up much of their total value locked are all centrally controlled. Not only that, but most of the trading volume in cryptocurrency comes from stablecoin trading pairs. Now this is a problem, because if a regulator were to shut down these stablecoin issuers, it would take out DeFi and rewind the clock on the crypto market by a few years at the very least. Now that the big banks are starting to notice just how many billions are leaving their balance sheets and heading to DeFi protocols and crypto exchanges, they've been pushing regulators to do exactly that. This is just one of the many reasons why Terra has been a top performer as of late. Its UST stablecoin has been gaining popularity as the decentralized alternative to USDT, USDC, and BUSD. Today I'm going to give you a quick rundown of Terra, bring you up to speed on some of its most recent updates, briefly review a few of its promising DeFi protocols, and tell you where I think Luna is headed. Before we get decentralized, there's a disclaimer I need to describe. Nothing in this video is financial guidance of any kind. It's just entertaining educational content to help you grow your mind. If you're here because you fell down the crypto rabbit hole, my name is Guy. Make yourself at home. The Coin Bureau has some of the highest quality crypto content you will ever know. Coins, tokens, exchanges, news, reviews, tutorials, regulations, taxes, and market moves. I do it for the knowledge, but I must admit the views are great too. If you're sick of moon boys who are all hype, subscribe to the channel and ping that notification bell to get more meaningful crypto insights. I know life can get crazy, which is why I always leave timestamps in the video description to skip around if you're feeling short for time or just feeling lazy. You should know that studies suggest that watching Coin Bureau videos until the end is always best. So now that you're up to speed, let me tell you about Terra, Luna, and UST. If Terra is new to you, here's everything you need to know. Terra was founded in early 2018 by business entrepreneur Daniel Shin and computer scientist Do Kwon. Terra was built by Terraform Labs, a software development company based in South Korea, which was incubated by a conglomerate of South Korean e-commerce companies known as the Terra Alliance. Terraform Labs raised around $33 million across various funding rounds in 2018, and the Terra mainnet went live in April 2019. In a sentence, Terra is an ecosystem of decentralized stablecoin tokens, which are collateralized by the Luna coin, and the first Terra stablecoin was the KRW token for the Korean won. Terra's KRW was integrated into the popular Chai mobile payments app in 2019 and is used by nearly 2.5 million people in South Korea. Today, Terra offers more than a dozen decentralized stablecoins, the most popular of which is UST for the US dollar. To mint UST or any other Terra stablecoin, an equivalent amount of Luna must be burned. So, as a simple example, if 1 Luna is worth $10, burning 1 Luna would mint 10 UST. Now, because UST can also be burned to mint an equivalent dollar amount of Luna, this creates the economic incentive necessary for UST to maintain its peg. If UST is trading at, say, $1.50, Luna holders can burn their coins to mint UST and make a 50% profit. Eventually, this process brings the peg back down to $1 due to the increased supply of UST. Now, alternatively, if UST is trading at 50 cents, UST holders could burn their tokens to mint Luna and make a 2x profit. This reduces the amount of UST in circulation, restoring the $1 peg. So every time Luna is burned to mint UST, a small fee is taken and put into a community treasury to fund new Terra projects and protocols. This ingenious system is made possible by Terra's proof-of-stake blockchain, which was built using the Cosmos SDK. Terra's blockchain can handle a few hundred transactions per second, and it has 130 validators. These double as oracles, which check the exchange rates between Luna and Terra's various stablecoins. Though there is no minimum stake on Terra for validators, the staked amount of Luna must be large enough to place in the top 130 validators by stake. Any delegated Luna is counted towards this number. Staking rewards for both validators and delegators are currently just shy of 6% per year, and any staked Luna takes 21 days to withdraw. Note that Terra does slash the Luna stake of any misbehaving validators. Now, Luna had an initial supply of 1 billion, which was allocated as follows: 30% to Terraform Labs and its employees, 20% to the Terra Alliance, 26% to investors, 4% to exchanges for liquidity, and 20% for stability reserves in case of any crazy market volatility. I should point out that Terra technically has a dynamic maximum supply of 1 billion. Basically, if there is less than 1 billion Luna, new Luna are gradually minted, and if there is more than 1 billion Luna, the excess supply is gradually burned. Now, if you want to learn more about how Terra works, you can watch my previous video about the project by using the link up there in the top right. Over the last few months, Terraform Labs' investment arm has dished out millions of dollars to crypto projects looking to leverage Terra's UST stablecoin, Terra's stable savings protocol called Anchor, and/or Terra's synthetic stock trading platform called Mirror. The first project to get some green was Cash in March. Spelled with a K, Cash is a user-friendly front-end application that's plugged into all three of Terra's flagship protocols. Another project to receive funding was Loop Finance in April, whose Terra-powered AMM DEX will be the back-end to the Loop Wallet, a food delivery app which will allow users to pay using any Terra token. Also in April, SPA Protocol got paid to create a decentralized hedge fund that allows so-called pool managers to invest Terra tokens on behalf of their clients in a trustless manner. In May, Terraform Capital turned the spotlight on the Harpoon Protocol, which will develop a platform to make it possible for non-technical users to buy up any cheap collateral being liquidated on Anchor. Less than a month later, Pylon Protocol took the stage with its Launchpad service, which redirects Anchor savings yields to new projects building on Terra in exchange for their tokens, among many other things. If that wasn't crazy enough, Stader Labs promised in June to take staking on Terra and other POS cryptocurrencies to the next level with its next-generation staking dashboard, which will allow for liquid staking and, quote, Yearn Finance-style strategies on staking rewards. More recently, Terraform Capital invested into Nexus Protocol, which hopes to make it possible to maintain stable yields from any funds deposited into Anchor Protocol, even when the market is crashing. The Terra dApp that people are really itching for, however, is Ozone, a decentralized DeFi insurance protocol, which was first detailed by Terra co-founder Do Kwon in May on Terra's governance forum. Without getting too technical, Ozone will use a portion of community treasury funds to ensure the UST earning interest on the Anchor protocol. Now, obviously, it's quite a bit more complicated than this, so I'll leave a link to Do's full post in the description if you want to learn how Ozone actually works. As you can imagine, the news about all these amazing dApps made the rounds at various VC firms, and over a dozen of them banded together in June to create a $150 million ecosystem fund to kickstart even more Terra projects. The list included some of the biggest names in crypto, including Terra Capital, Arrington XRP Capital, Block Tower Capital, and even Galaxy Digital. And speaking of massive amounts of funding, Terra announced the completion of its back-end for the second version of Solana's Wormhole Bridge, which should be going live in the coming weeks. This will make it possible to move tokens between Solana, Terra, and Ethereum in a fast and decentralized way. Oh, and if you didn't get the reference about the massive amounts of funding, that's probably because you didn't know that Solana has seen more funding than any other cryptocurrency project this year. And you can learn more about that by watching my video about it using the link up there in the top right. All these announcements and developments have had a predictable effect on Luna, which recently rallied way past its previous all-time high. This effect fundamentally boils down to the increased demand for Luna to mint UST, whose market cap has also grown exponentially over the last few months. Most of this demand for UST has come from Terra's DeFi protocols, and these have about $7 billion in total value locked between them at the time of shooting. If I'm not mistaken, this actually makes Terra the third largest cryptocurrency blockchain by total value locked, the first being Ethereum and the second being the Binance Smart Chain. Now, on that note, Terra's team and community have been pushing hard to get UST on as many cryptocurrency blockchains as possible. UST can currently be found on Ethereum and the Binance Smart Chain, and Solana seems to be next in line. This is logical, given that Solana is the next largest cryptocurrency by DeFi TVL, at least for now. Some of you may have also seen the news that UST had listed on Coinbase in early August, which was a somewhat surprising move to say the least. I'll explain why a little later on. In any case, Coinbase's UST listing seems to have been the spark which sent the Terra rocket to the moon. And this begs the question, how high could Luna go? If you watch my video about my top crypto picks for the rest of this year, you'll know that Terra is on that list, and I mentioned that Luna could hit $100 by 2022 if demand for UST continues to rise. I stand by that prediction, though I think it is possible that Luna could climb even higher than $100. This is because Luna's market cap is just $12 billion, which I would argue is a low valuation for a crypto project as terrific as Terra, especially with all the centralized stablecoin FUD flying around. My only concern is that there might be Luna whales selling behind the scenes. After all, most of Luna's supply went to Terraform Labs, the Terra Alliance, and early investors. Although Terra's own blockchain explorer doesn't show you a rich list, another Terra blockchain explorer built by Flipside Crypto does. As you can see here, about a third of Luna's supply is held by whales, and almost half of Luna's supply is held by the quote foundation, which is probably Terraform Labs. Flipside Crypto's Terra Explorer also gives a fairly limited Luna rich list, and it's enough to see that a lot of Luna's supply is being held by exchanges, which is certainly a good sign. If you're wondering why all this stuff is so important, you need to watch my video about cryptocurrency tokenomics, and you can find it up there in the top right. In terms of what Terra has planned going forward, there's a huge update right around the corner. Columbus 5 is slated to be the most significant upgrade Terra has seen since its mainnet launched, and it will introduce 3 new features to the Terra blockchain. The first is the burning of all seigniorage fees. Now, seigniorage is just the fancy term used to describe the small fee for burning Luna to mint UST. As I mentioned earlier, this fee goes to the community treasury. Now, the thing is, Terra's community treasury already holds over 93 million Luna, which is worth a whopping $2.8 billion. If I'm not mistaken, this would make Terra's community treasury the largest of any cryptocurrency project or protocol. In any case, it's safe to say that Terra's community doesn't need any more funding, so Columbus 5 will burn all seigniorage fees instead of redirecting them to the community treasury. This will add deflationary pressure to Luna, which could potentially increase the value of the coin and, by extension, the value of the community treasury. I think they call that a win-win. The second feature Columbus 5 will bring to Terra is interoperability with Cosmos's Inter-Blockchain Communication Protocol, or IBC. As mentioned in my most recent video about Cosmos, the IBC basically makes it possible to connect every cryptocurrency blockchain together. Now, I know what you're thinking. There are dozens of bridges between cryptocurrency blockchains already. What's so special about the IBC? Well, imagine you have wrapped Bitcoin on Ethereum, and you want to transfer your wrapped Bitcoin to the Binance Smart Chain. Well, you'd have to unwrap the Bitcoin by sending it back to the Bitcoin blockchain and then rewrap it again for use on the Binance Smart Chain. Not very efficient, is it? The IBC works by bridging all blockchains to a single hub. In this case, that's the Cosmos blockchain itself. With the IBC, you'd be able to move your wrapped Bitcoin on Ethereum to the Binance Smart Chain directly without having to go back to Bitcoin as a pit stop. This saves you lots of time and money. The importance of Terra in this equation is, of course, UST, which would become the decentralized stablecoin used for trading cross-chain assets on the IBC using Cosmos's next-generation DEXs. The third feature Columbus 5 will bring to Terra is Ozone, the decentralized insurance protocol I explained earlier. Columbus 5 will also officially enable support for the Solana blockchain via the Wormhole Bridge, and all of this stuff is set to happen at the end of September, specifically September the 29th. Though my belief that the bull market will top in mid to late September has been shaken by the recent dip, all these September dates are helping me keep the faith. And you can learn all about the other bullish and bearish events coming our way using the link up there in the top right. Now, if you've already watched that video, you'll remember that one of the Black Swan events we could see is a crackdown on DeFi by the United States Securities and Exchange Commission, or SEC. Yup, those guys again. Terra founder Do Kwon is hyper-aware of this threat, and in a recent tweet thread he noted that, quote, DeFi/crypto is at war as I see it. Decentralizing the monetary of major blockchains, i.e. UST, is the only way to make sure crypto remains free. As you might have guessed, Terra's status as a stablecoin issuing protocol has put it on the hit list of regulators around the world, and the first one to lash out was the Thai SEC in late March. It warned against Terra's illegal Thai baht stablecoin, and later announced that it will begin regulating stablecoins later this year, requiring issuers to register with the Thai SEC and abide by banking laws. The US SEC has been vocal about stablecoins too, and though no formal actions have been taken yet, it seems like it's only a matter of time before they start sitting down with Tether, Circle, and Paxos and giving them the Coinbase treatment, if you catch my drift. You might also remember that Ethereum-wrapped versions of Terra's mirrored stocks were some of the tokens that were delisted from Uniswap, which is now apparently under investigation by the SEC. Obviously, synthetic stocks of any kind are a big no-no. Do has been asked about DeFi regulations in recent interviews, and what he said was an eye-opener to say the least. For starters, Do points out the fact that nobody has seriously priced in the incoming crackdowns on centralized stablecoins. DeFi needs to transition to decentralized stablecoins to survive, and Do rightfully points out that any stablecoin that can be regulated is not decentralized. While Do is a huge fan of MakerDAO's DAI, he doesn't believe it can scale. A lot of the DAI in circulation is also collateralized by USDC, which is obviously an issue if something happens to Circle. Interestingly, Do isn't all that worried about US regulators because Terraform Labs is based in South Korea. If the US SEC does come knocking though, Do plans on dissolving the company and going completely decentralized. He reckons this should be safe because writing code is not against any laws anywhere. Now this brings me to the final topic I want to tackle today, and that's whether Terra's UST could become cryptocurrency's decentralized stablecoin. I'll start by saying that Terra's Thai baht stablecoin is still available on Terra Station. That's a pretty bold statement if you ask me, and it shows how committed Terra is to the ideals of decentralized money. However, the fact of the matter is that Terra is still very centralized. A lot of the development is done by Terraform Labs, and almost all the projects building on Terra were funded by Terraform Capital. This will likely change now that there's another $150 million of VC money on the table, but something tells me that decentralization is lower on the list of priorities for Terra's new backers. The last thing they would want is for Terraform Labs to shut down and go underground. It's worth pointing out that this is something that would be pretty easy for Terraform Labs to do, given Terra's community treasury has enough cash to last until the end of the century. As far as I can see, the biggest barrier to Terra's UST becoming crypto's decentralized stablecoin is liquidity, aka exchange support. Terra's relative centralization probably means Luna is considered a security by regulators in the United States. In plain English, it's more like a stock in a company than a currency or commodity. My evidence for this is the fact that Luna is not listed on any US exchanges, because I'm sure they would list Luna in a heartbeat if this was not the case. If you've tried withdrawing or depositing UST on Coinbase, you'll know the only option is wrapped UST on the Ethereum blockchain. You can't deposit from or withdraw to the Terra blockchain directly. This is a clever side door to compliance on Coinbase's part, and I would argue it showcases Coinbase's own commitment to decentralization. Anyways, I reckon Luna's lack of liquidity relative to its size makes it much harder for UST to become cryptocurrency's go-to stablecoin. The worst part is this will only get more difficult over time as regulators continue to rein in rogue cryptocurrency exchanges. Even if Terra becomes fully decentralized, centralized exchanges will not hesitate to delist Luna or UST if they're pressured to do so, and that would cause all sorts of issues for UST and Terra's ecosystem. Perhaps I'm just being pessimistic though. Terra's interoperability push might just manage to dampen any regulatory damage, and I'm sure Terra is lower on the regulatory hit list than some. With a bit of luck, Terra will gain enough adoption to sustain itself by its own right, and something tells me people will flock to UST if regulators move to take out USDT, USDC, and BUSD. That's not something I would advise because compliance is key. Right, guys? Well, that's all for today's diatribe about Terra. Hit that like button if it helped you understand the project a bit better. If you subscribe to the channel and ping that notification bell, that would be mighty swell. If you're crypto addicted or just bored, you can check out Coin Bureau clips for more. I'm active on Twitter, TikTok, and Instagram and give you detailed daily crypto updates in my Telegram. I even have a weekly newsletter where I unpack the facts and stats you need to help you stack those sats. If you're wondering how I make a living, you probably haven't noticed all these cool crypto shirts and tees I've been shilling. And you can get yours at the Coin Bureau merch store. Links to all these resources and more are waiting down below. Many thanks if you're still around. Know that your dedication is helping crypto get found. I'm off for now, but I'll be back before you know it.